Hey everybody, morning, my magnificent monsters. Welcome back to the show. How's it going today? Got a poll up already, and thanks for coming. Thanks for being here. If you're brand new, make sure you subscribe. Make sure you can chat in the chat. Kimberly, my favorite subscriber, in the chat there. Hey everybody, and you know, every day we hear about this glorious. Seems like they talk about green energy transitions. I mean, we've been talking about this for years. We see the commercials, we see the windmills. If you drive out, through parts of the country, I mean, it look like a field of daisies springing up everywhere. And then you see these glorious solar panels sitting up by the interstates these days, glistening in the sunlight and starting to be on rooftops. I mean, it's all a beautiful story, right? Especially if you see the commercials and the propaganda. I mean, it's a story of progress, clean future energy, saving the planet, one electronic car at an electric car at the time. It's glorious, right? But mostly a fantasy when you actually look at where we are right here today. Because with the politicians and the ESG funds, and while they're all busy patting themselves on the back, the real world of steel, concrete, and megawatts is telling a very, very different story. And if you've been paying attention, this story is screaming with opportunities. So let's talk about the biggest story, possibly of this decade: artificial intelligence. That AI gold rush. Every tech company on Earth is in a frantic race to try to build the biggest, the smartest artificial brain, the best model, get the biggest data center, the most inference. They're spending billions, hundreds of billions. They're buying chips from NVIDIA. I mean, if you've missed out on me talking about this story, it's a classic gold rush. Everybody's buying shovels from the same guy. Classic, right? But here's the high school level question that seems to have stumped some of the biggest, smartest people in the world. Where do we get more power? Where do we get more power? It's what keeps the lights on for this digital brain. We need more power. This digital brain is going to solve all our problems, but how do we get the power? It's not windmills. And right now, it's certainly not sunshine, because neither one of those is 24/7 type power. At least not if your solar powers are right here on Earth. Solar panels. And not if your windmills are anywhere on Earth, pretty much. I mean, the wind doesn't blow all the time anywhere that I know of. At least not constantly. At the same speed that you can count on. In a place where you can get the power to the places it needs to be. So data centers, these massive warehouses. XAI is building a giant one in Memphis, Tennessee. They're the most power-hungry things that we've ever built. A single AI data center can consume as much electricity as a small city right now, and some of the future ones might be as much as a big city in one building. The International Energy Agency projects that by 2030, that's just 4 years from now, the electricity demand in data centers is going to more than double what we have right now today. We're facing an electricity shortage. Right now, if you order a turbine for any kind of power plant, 2030 is the earliest delivery you can get. They're back ordered for 4 years. Now, this is not some distant future. This is right now. The grid is already stretched thin. We're talking about plugging in thousands of new cities worth of demand when we build these AI data centers. Where does the power come from? And this is where the story gets interesting. This is where we're seeing a lot of investment moving, smart money type stuff. In Vistra Energy, the ticker for that is VST, Victor Sierra Tango. Maybe you've heard me talk about them. Maybe you haven't heard of them. They're not some sort of big AI tech company. They don't have a charismatic CEO that gets out there posting memes all the time. They're boring. They own power plants. Big, loud, not very green power plants. And they're quietly pulling off possibly one of the greatest heists in modern financial history right now. Just this week, while everybody else is distracted by the latest crypto drama or possibly tariff drama or whatever, Vistra went out and worked a deal to buy 10 natural gas-fired power plants. The deal they inked, the price they are going to pay, $4 billion. Now, sounds like a lot of money, but here's the part that should maybe perk your ears up a little bit. The kicker in this: Vistra paid $730 per kilowatt of production power capacity for these plants. You know what it costs to build a brand new gas power plant today? Well, the cost has more than doubled in the last 2 years. We're talking about $2,200, maybe even $3,000 per kilowatt to build a brand new plant. And that's even if you can get the parts, because there's a big, massive global shortage of core components, like the turbines that I mentioned a second ago. The big manufacturers of those turbines, GE, Siemens, they're backlogged. If you order one today, you're looking at maybe 2030, maybe, for delivery. And Vistra just bought a full fleet of fully functioning, already hooked up, already producing power, already producing cash power plants for a third of what it would cost to build a brand new one from scratch. And they don't have to wait 4, 5, 6, 7 years for all the parts to come in. They can start making money tomorrow if they can close the deal today. This isn't just a good deal, potentially an absolute steal. To quote the analysts, they're not just buying shovels for the gold rush. They're buying the entire energy grid that powers the mining camps. They're getting it at pretty much a 70% discount right here. In the catbird seat, if you will. This isn't the first rodeo either. This is just the latest move in a multi-year shopping spree that they've been on. In 2024, they bought a nuclear power plant fleet for $7 billion. Last year, they spent another $2 billion on gas power plants. And their competitors like NRG and Constellation, well, they're in an arms race right now to buy up every existing reliable power source in North America. Why? Because we're in a gold rush, an AI gold rush. These data centers, they need deals. They need power. They need guarantees. They want to sign contracts. The people who sell electricity could possibly make more money than the people making the chips, or even the people mining for the digital gold with these AI brains that they're building. And the market is starting to wake up to this fact right here. So let's look at the numbers. In 2023, Vistra was a sleepy, boring utility stock trading at $38. $38 a share. And then 2024 happened. The stock, well, it started moving. Pretty much went on an absolute tear, up 261% in 2024. Ran from 38 to over 200 in less than 2 years, a nearly six-bagger. Did you hear about that on mainstream financial shows? Probably not. They're busy talking about the Magnificent Seven. They're busy debating about AI being in a bubble or not. But the real magnificent story has been happening in boring old utilities. So what's the real play here? The story is kind of simple. Demand for electricity, it's not going down. It's only going up from here. The supply of new power plants is severely constrained for at least the next 5 to 7 years, maybe even longer. Therefore, companies that own the existing power plants, they kind of control how much they can charge. Supply and demand. Demand keeps going up. Supply relatively fixed. Prices go up. This is inflation at the energy level. It's the ultimate toll road investment. Vistra isn't betting on which AI company is going to win. They don't care. They're just going to sell the electricity to everybody. And as we're seeing, the future of artificial intelligence for the foreseeable future is going to be powered by natural gas, not nuclear. It's reliable. It's dispatchable. It's already existing. It's what keeps the lights on when the wind doesn't blow and the sun doesn't shine. So while everybody else out there is chasing hype, take a look at some of the plumbing, some of the infrastructure. That's where some of the fortune probably going to be made. They worked this deal. They inked it. As long as it doesn't get rejected by regulatory approval, it's probably going to go through. And they just worked a pretty good deal. So stay savvy out there. Stay cynical. That's the monologue for today. Let's jump into the charts. See what else we might be able to find. So jumping over. And all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. So I make predictions. Sometimes they come true. Sometimes I get it right. Sometimes I get lucky. Sometimes I don't. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries, bonds. If you trade them, you might lose money. If you want somebody to tell you what to do, well, there's people you can hire for that. Be careful. I highly suggest you just take a vested interest in your own financial well-being because, well, a little bit of patience, a little bit of discipline, a little bit of personal accountability, those 3 pillars, you can work it. You know, this is my account right here. I started this challenge and showing this publicly tax day last year. Where's the big drawdowns? Well, they're in here. There's no big ones. These were the drawdowns that I've had. Just 4. Over the last almost year. 9 months. That's the curve. Profit and loss curve right there. The little dips are in there. It's going to be $53,000 I've made. Right there. Now, the challenge in this account is to get it to an account that makes $50,000 a month. $14,000 a month is not 15 or 50. Excuse me, not 50. It's not 15 either. And I've got a ways to go. Got a ways to go to get there. Look at the 3-month average. That's only 8. Just 8 and change. So I've got a long ways to go to 50K a month, which is the goal on this account. Stay tuned. Keep coming back. I'll work my way there. Show you how I do it. All the twists and turns along the way. Now, let's dive in. Look at where the markets are this morning. Overnight. That's cool. We pushed higher. And I kind of suggested yesterday that if we were able to hold that 15-minute roadmap line, break back above these highs, we were set to push on out. That's what we're set to do right now. Set to push on out. Now, there's a risk coming up on Friday. Let's see, poly markets. See if I can find it. There's a bet on here. We have a Supreme Court decision right here coming up on Friday. Right now it's at 20%. Yes. 80% no. If Trump loses the Supreme Court decision, they rule the tariffs illegal. They rule that we have to pay them all back. This is a black swan type event that can cause chaos in the market. Be aware. This is due on Friday. Could cause some chaos in the markets. We could pop up, hit that target, to the upside in the short term. Then come in Friday and start down the toilet. Why would it cause a big problem? Liquidity. Liquidity, liquidity, liquidity. So the name of the game here, I commonly look at NKD as a global liquidity indicator. It came up to the top and hit the top. It didn't break out. Rejected. First move down, retrace. Next move down can be pretty dramatic. Now, that's a three-wave move. We kind of topped out at the point where I would expect to top out. And this might be needing a bigger correction here. We might see this global liquidity thing dip down like this. It's lining up a little too perfect. Now, people are like, oh, well, the news hasn't happened yet, this, that, and the other. So there's two kind of thought processes about the market. One's like the market is efficient, takes in all the information, makes the best decision, prices everything appropriately. But then there's the kind of like the version I like to think of better about the market is that the market is kind of like a big hive mind. There's emergent behavior. There's stories that are being told. There's warnings that show up, even though no individual market participant knows what's about to happen. All of us acting as a collective bring some sort of intelligence that doesn't actually exist. Tells a story that, if you know how to read it, kind of tells you what's going to happen next. And this is where I kind of get lucky a lot on some of these big, bold predictions. Now, I don't know what's going to happen with the tariffs. Maybe they actually do rule in favor of Trump and the tariffs stand, but we still get this big pullback. Now, if global liquidity sucks down like that, risk on assets are going to probably get hit. What are we talking about? We're talking about NASDAQ. We didn't break higher here. This is still in a lower high situation, still hitting our head very firmly right here. That still leaves the door open to repeat that big down we did back here October to November, right over here. Still leaves the door open for that. What would that look like target wise? Here's the high, here's the low. Right now there's our current high. Opens the door for NASDAQ to move down into this area right here. First move down. Copy, paste. Put us right down in here. The minimum would be A equals C. And possibly extending that all the way down to C equals 1.618 times A, which would be down here at 22,000. Now, you're probably like, well, I don't trade NASDAQ directly. I don't know how to do that. And I don't know how. So 22,000, roughly 41.1 right now is the conversion to QQQ. That would be 535 on QQQ. That's all the way down here. First move down, retrace, right down in here. That's a pretty big downside. Pretty big downside, right? There was the tariff pullback before. Maybe it's just as big. Maybe it's not just as big. But that's the warning. It's the warning, all right? Warning signs are out there. We might get a bad reaction depending on what happens. NASDAQ itself here, the futures, not looking super bullish. ES, probably going to push out to a new high. Now, for quite a while, I've had this potential high right up here with an alert that maybe we top out at that 70-40 area. Still possible we reach up there and then embark on a bigger downside. NASDAQ not confirming we're going to move higher here. It actually looks like we're about to break down. Russell reaching on up. This kind of confirming that we might stretch this up to 2,700. Oil. Well, that rejected the downtrend of highs, just like I mentioned yesterday. We would probably do. Set for making a lower low. Now this can keep grinding for the next several months till we get down to that 50 area. We get down, we poke below 50. Likely we're going to kick off a hot war in the Middle East. Just saying. Last time we spiked down here into the 55 area. What happened? Started shooting missiles at each other and made the price of oil rally. Then we brought it all the way back down. Took a little while. Once this breaks below 55, odds are high that we're going to see missiles flying in the Middle East again. Oil likely to bottom out somewhere around 50. Gold. Yep, stalling out there at the top of the blue zone. First move down, retrace. Next move down, potential. Just be careful. I'm pretty much off of gold right now. And if we get that, 4,000 could be a real target here. And if things get extra spicy to the downside, roadmap line is just down here at 38. You may be like, no way, gold's going to retrace like $600 from where it is, but just be careful. Just be careful. We break down below that uptrend of lows and things can get pretty ugly pretty quickly. Silver also taking back all of yesterday's pop. Did not make a higher high. Be careful. This is starting to indicate topping action. Big swift retrace would be in order. Let's see, I think it's ZSL. Ultra short silver. This right here saw something like $150 million of inflows in the last couple of days. $150 million of inflows. This is ultra short silver. This is leveraged silver short. That means when silver goes down, this goes up at twice the rate. So if silver went down, say 50%, this could go up 100%. That's not a big pop though. It's only going from 4 to like 8. I think it's been beat down a little much and it may not respond like people think it should. So be careful playing in here if you play in here. Ultra short gold, GLL, same kind of situation. If we see a bigger pullback in gold, this one will likely move up. Now, if you believe in gold and silver going up, well, just get long. Get long gold and silver. Bitcoin. Bitcoin. This is not positive price action. That's starting to feel like deja vu. More chop in store. Boy, it got everybody sucked in. And now, looks like we're coming right back down to the bottom. We start breaking lower lows. Well, probably going to take a trip down to 75 at least. Didn't even make it up to the roadmap line. Bummer. This is not, yesterday I was still like hopeful that we could turn this baby around, get a breakout. That candle yesterday, no bueno. Not good. This looks like we're probably going lower. Ethereum tried for the roadmap line yesterday. Didn't quite make it. This starts breaking on down. Probably going to make a lower low here too. Now, Ethereum chart looks a little different. If we can hold on to this zone right in here around 29.90, 29.80, turn back higher, we still have the chance to pull this up. The Bitcoin dominance chart though, if this breaks lower low, where I've got my alert down here, if we break lower low on the Bitcoin dominance chart, probably confirming we're in crypto winter. That little icicle face guy. Put him on here. So if we break down below this lower low, or break down below this low and make a lower low, probably confirming that Bitcoin's going to experience crypto winter. And what does that mean? It means probably through like October of this year, we're going to see Bitcoin going down. Now, that doesn't mean that we won't get a few months rally in here before we pull it on down. But between now and probably out here in late summer, early fall, maybe mid-fall, we're probably going to experience a downtrend overall in Bitcoin if we're in crypto winter. NKD, like we already talked about, has that risk of coming on down. If we can pop it out, if we can break out upside 54, 56, 58, maybe even 60, but looking like we're going to embark on a bigger pullback. Maybe retest the breakout from back over here. If things get extra spicy. Dollar set for making a move down. This rejection of the roadmap line sets us up to make a lower low. And this low we made back in September. And that could take a few months. Like the rate we've been dropping in here could take us out here till June, July, before we actually finish that baby up. And that could be, that could partly play into the tariff stuff. Apple, looking like it's going to take that dive to the roadmap line there. Retest the breakouts. All in that same area. So it looks like we're going down to 250 area. Another $12 or so down at least. Could be down to 245 on Apple. Amazon, trying its darndest to try to break through this resistance here. If we can do it, upside potential on up here. 265. If we reject it, watch out down below. Google, trying its darndest to reach on up to that 337. That'd be the upside target there. Meta. Still want to see this reach down to that level and then bounce. Resistance right here at 674, 675. Support down here at 630. Want to see it hit support and hold and go higher. That kicks off the 1100 to 1300 targets, and that can take a couple years to get there. Not going to be fast. You look at the climb rate Meta usually goes on with the pullbacks and everything. Probably chop its way up here to the target. Microsoft trying to hold on to those lows. We're kind of pinned in here. Declining highs, higher lows. Just kind of filling this out. With this kind of pattern, if we break down, it can be pretty swift. Get us down in here. If we break out, it can be pretty swift and get us up here to this resistance. But there's probably 10% chance we just go keep just churning this zone for now. Nothing very clear about this consolidation. Very small. It's kind of a wide watermelon seed squeeze at this point. It's got a small kind of angle on both of those. So we could just keep churning in here for another couple months before we finally try to break out or down. Usually the mouth of the thing is the distance will go when we pop, but it's not a very tight consolidation, so it's not going to be, probably not going to be the most sparky bust out. Nvidia here, still underneath that 195 and still has the door open to go visit this 150 area right down there. Tesla. Oh, it got really close yesterday. Was that close enough? Close enough. Tag that 429. 423 would be the ideal spot to reach down and tag and then bounce. That would give us the most energy for the upside. If that 423 doesn't hold, we're likely to come on down and tag the roadmap line. Now, I was speculating if we see a rally from now into earnings, we may get sort of an A, B, C situation where we decline off of earnings. So I really want to see this kind of finish bottoming out. Maybe make a move up and a retrace into earnings and then set us up for a bigger pop. So we'll see what happens. Running out of time for that. We've only got like 3 weeks left for earnings. Netflix still struggling in here to find a bottom. Looks like we're going to push on down to the bottom of this consolidation from 2024, early 2025. Now I go pull gainers as things moving $2 or more up in the pre-market, put them on the gainers list. I go pull decliners, things moving down $2 or more, put them on the decliners list, and hunt for opportunities. So right now we have ONC, one of the biggest gainers. When that breaks up through 350, upside 396. If you want my bias for the day, stick around to the end. I also have I have 10 tickers that are set up with entries ready for today. So stick around, we'll get to that here in a minute. And yeah. Dun, 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 dun. Hal Fuller, the request show is Tuesday evening. You missed it last night. I don't usually take requests in the morning. I've already built the list. I don't revise the list. We just kind of run through here. This is the top moving stuff of the day. We try to find some opportunities here. Now, usually the opportunities are more on the decliners, but sometimes the gainers show stuff. Like glue right here, looking a little played out. We may need a bigger retrace. VLO, moving on up. The target still sitting up there at 189. MSTR got some good news last night that they're going to be able to stay in indexes and not get rejected by MSCI. They were getting some positive action on that, popping up this morning, getting continuation. This may take a trip on up to the roadmap line. Somewhere up around 250 is where I think that would meet. Even if Bitcoin continues to decline. Now, right now, their value, if I have the numbers right, they're being valued at 80% of just their Bitcoin holdings. So that'd be like a 20% decline still to go on Bitcoin, or this thing has potential to climb back up and put a premium on their Bitcoin holdings. So we'll see what happens there. Of course, every dollar it moves is adjusts all the numbers. VTYX, bioscience, biotech. Be careful on that stuff. Unreliable. I don't typically trade it just because I like consistency. I like to consistently make money. If you miss that, this is what I like to do. I like to consistently make profits. Jumping into biotech has not been conducive for that result. So same here, ABVX, more pharmaceutical. I just kind of avoid that because, well, my patterns don't tend to work on biotech and pharma. That's why I have a button for it. SIMO, 111, 115, next upside. This has been kind of in a long-term consolidation, trying to bust out of this. You can see we rejected the breakout right here, came all the way down, hit support. Now we popped up, triggered the entry right in here, looking for that next upside push, and then we may experience another pullback before we go again. MPC. For all the oil companies that were having strength on all this news, Venezuela stuff this week, MPC not looking super strong here. Now, it has this big pattern. The high right here, the low right here. This entry was right in here. This is a weekly chart pattern, and the target is up here at 243. The stop is $1 below the low, and this whole thing, it's a weekly chart bounce right there. And some people are like, well, how long do weekly charts take to play out? Average 45 candles, 45 weeks. It's almost a year. Standard deviation on that, 35. Take into account 3 standard deviations to get you to the 99th percentile. Add this all together, it's 150. That's like 3 years. It'd take 3 years for this to play out up to the target. So maybe you got time for that. Maybe you don't got time for that. I'd rather go after stuff a little more spicy, you know, like that meta play. If meta hits the target, you know, we're looking at maybe a year or two to double. This, you know, we're looking at maybe 3 years to go from 170 to 240. And it could still stop out too, so no guarantee. Air. Let's get the right air. And it's coming up to targets. Be careful there. Looks played out. ALB. I do expect this to maybe struggle here just a little bit. I want to get on the upside of that big 618 level right there at 160. If we can get above 160 and show that that's a firm support, this probably has bigger upside to go. And we're talking about potential up here like 5, 6, 7, 8, 9, 10, 1,000. Nice upside. But if for some reason we rejected this area right here, started back down, that would be a warning that we could go down bigger. So there is still risk here. It's not all clear, but we did poke above this consolidation that I've been looking for a long time. Right into the 618 though. So got to get through that 160. That's the next kind of thing we got to do. Then we'll have this high up here to contend with. We'll have this high up here to contend with on the path to higher levels. Starting to look good, but still cautious. PSX. Set to pop one up right there. APLX. 2x leverage on APLD. Looks kind of bad. Downtrend of highs. APLD. Let's go check out that one. Downtrend of highs. Looks like we're set to hit the roadmap line. And we did hit it back here. So here's the high. Here's the low. Did kick off an entry back here. Looks like we may want to bounce yet again before we come up here. Same thing here. 45 candles. Average. 35 times 3. You get the 99th percentile. So it's 150 candles. That is 7 months. For the time. How do I know it's 7 months? Drag it out. Pull it out. 150 candles right there. That's still leaves 1% of the time you could run out of time. But if you wanted to buy options and not run out of time, 99% of the time, 150 candles, 222 days. That's December. And look, there's 7 months, July. So that's kind of how that works. How do I know that these are the statistics? Because I've back tested hundreds of thousands of these trades across all time frames. Funny enough, the time frame doesn't seem to matter. The candles are still 45 candles on average. More pharmaceutical. Wayfair never has what I need. And coming up on the 618 resistance at 123. Chevron hit the target, retraced. Beautiful. Beautiful example here. Here's the high. Here's the low. Never gave you really, the entry right there was the opportunity. 1 day pop and coming all the way back down. RGC. Here's the high. Here's the low. Coming back up. Here's the high. Here's the low. Entry if we get the close about 37 today. 111 target. MTNS. Dumpster fire. Absolute dumpster fire. Don't touch stuff like this. Reverse splits. Dumpster fire. Dumpster fire. Dumpster fire. Dumpster fire. Probably going back to 0. Continuing its march to the bottom. LABU. 3x on biotech. What a nice pop there. Like we got that extension, roadmap bounce down. Nice reversal right back to highs. Be careful here. This one's also a decliner. Net decliner over time. Biotech is expensive and that can take another trip right back down to the lows. Historically, that's, even though it makes big swings, tends to grind into the dirt. TNK, potential bounce set up here. Let's clear the drawings. Here's the high, here's the low. Get through the 58 area, 65, 66 on the upside. Johnson Controls. Yep, did the bounce and looking for that to clear. Or we're gonna have to clear the gap. Gap resistance. Back above 117 kicks off the potential for 126 up there. Decliners, AGQ. Yeah, just be careful on gold and ultra, especially ultra gold. ASML, tagging the target. Next target up, 1,300, 1,300. PPLT, pulling back a little bit. Platinum and Palladium still has bigger upside dreams here. I don't think they're played out yet. Palladium, especially if we can get through this 618. right here. 364, 400. Bigger picture up here. Lights. Looking for this to potentially take a bigger spill down soon. ASTS still has a 114 upside. Anybody that was following me on Rocket Lab, this one played out. Already hit the target. Benito, Bendito for now. Watch out for the bigger, it's already on a bigger retrace that hit the target. So lots of gold miners and stuff in here. NEM, watch out for that to retrace. Bigger downside potential. CRDO, back to the roadmap line. Southern Copper has been pretty exponential here. Probably needs a retrace. Retest the breakout. Another, once again, we already did it here. Got up to the 1272. May retest this high at the 1.1448 at 138 before we can push on up to 180 on that one. FCX was looking like a breakout yesterday. Tagging the 57 area. Watch out for a retrace there. Could do that before we push on up to the 80 area. COHR probably needs a bigger retrace. SIL probably needs a bigger retrace. ARWR probably needs a bigger retrace. Lots of that going on here. ONDL, 2x on ONDS. ONDS looks sketchy. Be careful when you look at the big picture here. We're kind of hitting our head on the all-time high. This SPAC, whatever it was, that can turn this down pretty violently. So be careful here. It's not the most bullish price action, and it's kind of topping out at an A=C potential right now. So watch out for that one to retrace. I don't care what anybody says. Just going off the price action. BABA, right back down to the roadmap line. Wow. So looking for this to hold here, break back up through the 618 at 172, 173 area to kick off the bigger upside potential there. Baidu was getting near the target, 155. PDD is coming up to 618 potential right there, 125. Looking for that 145 if we can get through that. Let's see, DEO keeps grinding into the dirt here. 78, next downside target. A-Lab, back to the roadmap line. Look for that breakthrough 201 to kick off the entry. Get the daily close above that. Kick off the entry up there, 287. RMBS probably needs to get a lower low than we got back here. Oak low. If we can hold on to that low, breakthrough 131 on the daily close, kicks off the 223 upside target. Stuff set up with the setups today. Alexander's. Real estate investment trusts don't always follow the pattern, so caution there. I don't have a button for it, but I would be looking at this bigger pattern. If you look at the smaller move here, we did close above the 618 and did kick off the 246 upside target. This has an 8% dividend, and 8% dividends are not usually big movers, so be careful. Does have 31 trades, does have 64%, which is under the 72% average, or 75% average, excuse me. And it is a negative profit factor. So these tell you to be careful. It is a net loser on this pattern historically. APTV. Kicking off the entry, 90 target. Statistics don't really matter on this one. You need a statistical population of 30 for these to matter. So when you don't have that, fall back on the average. 75, 1.2. That would be the average across thousands of trades. CGNX, and that's a downtrend. I wouldn't touch it. ETSY. There's the high. There's the low. We're not quite to the entry I would take. It did pick this one because of this price action under the roadmap line right there. There's the entry. 66 would be the target. But you can see this algorithm filtered it out because of the volatility there. The trading view algorithm, that is. I have two different versions. I have a Python version that runs and aggressively finds all the potentials, and then I look at them on the chart. And I have a version that runs right here that has more aggressive filters because I want the best of the best stuff. If I'm gonna take a trade, I want a trade that's so good I could put my house at risk on it, and this is not that yet. So looking for this to close above 65 to potentially kick it off here. 11 trades. These don't matter. Right there. INTT. Yeah, it still hasn't kicked off. And this is under 20 bucks. So stuff under 20 bucks, low price stuff, might fail. PHG. Why do I bring these up and show them? It's examples of good stuff and bad stuff. If you don't know what good stuff and bad stuff looks like, then how do you know what the best stuff is? This one, 33 trades, check. 85%, check plus. 1.5, check plus. Running better than average. It's already in the trade from back here. It will not double enter. Target right up there, 30. It's a pretty good one. Pretty good one. Already on the way. It didn't stop out back here. Stop is $1 below the low. Probably going to work out. We've talked about that when this one's been on the list a couple times because it's done a couple bounces here. Still looking for that to play out. So that whole 150 candle 7-month thing, this one's a good one though. There. Quick. This one kicked off. Here's the high. Here's the low. There's the entry. $8. Yeah. Pass. SBLK. This one kicked off too. Move the prior one. That one worked out. We talked about this one probably back in November. Worked out. Hit the target. Did another retrace. That's classic. What we see. And why don't I go for a higher target? Because most of the time after we hit the target, we retrace right back down, set up another pattern. Here's the entry. Here's the target. 15. These numbers don't matter. So 75, 1.2. Snap. We've talked crap about this one. Wrong loves this. Snapchat. I've never gotten a Snapchat. Never been on Snapchat. Never seen a Snapchat. I don't know what you use Snapchat for. It's a social media thing, but kicked off back here. Target's up here. 75% of the time, and this is low price stuff, so be careful. And VC downtrend. I wouldn't touch it. Probably gonna fail. All right, that's the list. Bias for the day. You know, we did the bullish thing. Like S&P did the bullish thing. So this is probably going to push out. Probably going to push on up to highs. Got the targets. 69.46. Well, 69, yeah. 69.63, I guess. Why am I reading 46? 69.64. Oh, 69.46 is what it is. 69.64. If we're going to hit the target, that's potentially it. Extension target, 69.80. Pull back from there. NASDAQ, on the other hand, struggling here. We may work this small little bounce up to a new high, but right now this is lower highs and struggling. Looking at the GEX levels, GAM exposure. I'm going to pull up the levels on bullflow.io. This is not my tool. There's a bubble, GEX bubble right in here up to 628. The biggest level out here, $500 million. Sitting here at 627. And so this bubble's sitting here for this week and is indicating we may drift higher into the end of the week. And then we could drift up and then drift back down. Looking at this out here, we're starting to see a bigger level building at 641. Caution if you're betting on this to go down. This could be indicating we're going to push on up out of here. This level may get superseded by a big level up here at 640. There's also a big level down here at 610. That's a big fat range. So 641. $641 times 41.1. It's a NASDAQ price of 26,345. That would be right up in here at a new high. It's out to the 16th. So right there. So we could see there's a GEX level building right there that we could go visit. Just be careful. If we break out of this downtrend, things can accelerate to the upside pretty quickly. Now look at the SPY levels. This is kind of like using night vision goggles. I feel like looking at where the options are priced. It's just kind of looking where price might go. So right here we have the bubble sitting above us up to about 696 on SPY. And that kind of fits with 696 going to visit that fib level right there. Then we could reject. So don't have to go on through that. Looking on out here to the month. No huge levels. We got a level at 700. This building, $500 million. And then there's $800 million down there at 680. So a bigger level down here, indicating that we may see some downside. $1 billion level right here, right where we are at 692, but that can get chewed up as we go along the day. Seeing $1.5 billion right here for Friday. So it's looking like we might get some upward pressure into Friday. It's kind of it's reading the tea leaves. There's no real nothing. And you can think that job openings matter. Hill of beans. I don't really pay attention to much economic news because I don't think it matters. Back to what I said about the market. It's a giant hive mind, and there's emergent behavior, emergent data. If you know how to read it, probably looking like we're going to go higher into the end of the week, and then see what happens. So if you're short NDX, you have something capped off. I know a few of you played some calls. Be careful. We could see this pop out of this downtrend and rally up here. Right like that. So be careful out there. I'll be back 11:30 with Jack. I think he's back today. He had no surgery, so he should be back in action with me on Market Masters at 11:30. And otherwise, I'll be back same bat time, same bat channel, right here, 9:15 tomorrow morning. Do it all over again. Have a great day. Morning Monster.